why don't we take a look here? I've got a workspace set up. Crude has been seeing some price action. We have some news out this morning, and the market really reacted to it. I'm going to talk a little bit about news because sometimes, let's see, when's the next? I'll have to get my calendar out, but every month, start of the month, we get unemployment numbers. Every Wednesday, we get crude numbers. Any of these, sort of big numbers are known catalysts. They're going to affect the market, and they affect it for us in two big ways. So first of all, the price action a lot of times is really muted for intraday trading, leading into that because nobody is making any big moves just hours before any sort of big event, like the Fed, Fed minutes, any sort of thing like that. Incidentally, Fed minutes last week or a couple weeks ago, was almost like a non-event. It seemed like no reaction from the market. Let's take a look at today's price action. And coming into news, we always want to, point out a couple things. So first off, this period of time, we're going to expect relatively lighter volatility. If we have trading opportunities, which in today's case, it really wasn't, too much. I mean, if you're trading this early, so this is 2 o'clock Pacific, which would be 5 Eastern. If you're trading this early, a lot of times there's not a lot of price action there. Sometimes, if there is, I mean, let's say, for example, here prices are testing at the 9-minute support, the guidance support here. So we have the overlay here. Here, as prices are testing that 9-minute support, as they bounce off, this is the point where it's turning blue, where that dot is, and then the close outside the bands certainly makes this a little bit more difficult to trade. It's just a spike of about 20 ticks there. So certainly enough risk that makes it unfavorable, but after prices pull back here, this is potentially set up, and then if this were to continue on further into and prior to news, clearly if we are trading this product, we should know there's news coming. There's a scheduled catalyst, I should say, and when that's the case, certainly take it off the table. I mean, you don't want to have to guess, because when we get those when we get the news, a lot of times, like I said, there's certainly the exception to the rule. Like last week on Fed Day, we had basically no reaction, but a lot of times we will have prices just run stops on both ends, and it's really difficult to have a significant stop. So a significant stop meaning one that's wide enough that it's meaningful, right? Because the noise just gets so big, right? So the range expansion just takes out both sides, and then ultimately a lot of times it resumes where it's going to go. Anyways, coming into this, no positions, right? Not really any positions. Buy signal here down below resistance. It was trying to get through that for an hour or so. It did pretty sharply, and then was flat into prior to the news. Same thing with this short signal, the red bars here, pulling back to resistance and trading lower. It was a nice move. It was about a 30 or 40 cent move, but no continuation. And here, as prices were testing resistance, if we were looking for that trade, in the first hour of the day for prices to continue lower, that would have been the time to look for it. We never got it, but it's good that we have that, right? We know to be looking for something, but it just didn't come, and prices break to the upside. So here's news, right? Big spike to the downside, and then it takes out both ends. So if we see, how wide this sort of range expansion was, you can see how there really wouldn't be any way for an intraday trader to have a stop that's significant. You're going to get run out either way. So if not that there was any sort of positions that, or open profit on a position like this today, based on what we can see. Sometimes you do. Sometimes you have that move that you're in an hour before news, or a couple hours that's been setting up before news. Take it off. Be extra vigilant about taking profits off the table. If we didn't have resistance here and we had the long position, from here to here, it's 30 ticks. I mean, certainly $300 per contract is nothing to sneeze at, but and it's outside the bands. But especially on a day like today, don't let it go for nothing, right? So this is a point in or 120 ticks of price action just spiking like this. And you certainly know that the fills are going to be really sloppy during that period of time. Anyways, let me try to get through this quickly so I can get to your question, Julio. So as prices are setting up, we know the major trend direction is up. We're looking for a good lower risk entry point. It's a little difficult for me visually to, especially now after the fact, to tell you here, right, buy it. 51.70 and 7/10, right? Prices did pull back a bit. If the risk and reward is reasonable to you, so that's, a judgment call at that point in time. But if we're getting in somewhere around here and the risk, I mean, if we're going to set it there, right, it's going to be, nearly 30 ticks, and prices can only continue up around 10 ticks. You can see the sort of asymmetric setup there, where it's not that prices can't continue up, but they need to break through the highs. And if they get up to the highs, a lot of times you'll see this, prices get up to the tick and then turn around, well, then you're going to be in trouble. And you're going to be looking at no chance to be able to scale out, right? Because you're not going to take it off for 10 ticks if you are risking 30 at the outset of the trade. And if it turns around, you're going to have to take the full loss. All right, so if prices are going to pull back, or if prices can pull back, a lot of times nominally the price will be higher, but at a point like this is a lot easier to, easier sort of trade setup, right? So today it's still a little bit less than what we were looking at before, but also a little bit more favorable risk and reward. Also, on following sort of news like this, I mean, you can't be quite as picky, but it's sort of just a risk and reward sort of thing. So clearly we see here the major trend direction is up, right? The break to the downside, the move higher, and then the pullback, and then continuing up tells us that here, when we get that pullback, that's the point to look for the entry. And we see here relatively quickly the dots moving up. The risk is almost out of the trade. So even though there's just a bit of open profit here so far, it's about, actually not a bit, it's about 60 cents of profit, open profit, or actually not 50, it's not 60, a little less than 50. Still $500 per contract at that point in time. You can see the risk coming out further and further, and then there'd be the exit here. You can have a chance to look for continuation, which doesn't come. It's basically flat through the rest of the day.